Hello, everybody, and welcome to My Two Sats. My name is CJK, and today I'm with British HODL. We're going to get his two sats on Bitcoin as an institutional asset versus hillbilly coin, new Bitcoin cycle dynamics, and Bitcoin all-time high price discovery.
This is the first time that the daily demand for Bitcoin has gone from, $30 million a day at an equilibrium to $350 million a day coming in via these ETFs. And hodling is work. If someone thinks that, you just hodling is not work, you clearly don't own enough Bitcoin. What they're about to realize is there's not going to be the crash that they thought was going to happen. They need to play catch up on the negative real rates that they've actually been earning. It's completely reasonable to assume that a 1.16% allocation of that $8.5 trillion will find its way into Bitcoin now that these products are available. What happens after that once you realize you left $1 billion on the table by trying to rebalance and be fancy, and you could have just left it in Bitcoin and outperformed everything else that you were going to do as a fund?
The optimal allocation is 85%. Because we are looking at the apex predator of asset class here. Maybe we can benefit from our Bitcoin or our Bitcoin ETF shares in a way where we won't have to sell.
The thing that I worry about the most and what I try and create content around is trying to elevate the consciousness of people who have sacrificed years, energy, hard work to own Bitcoin, and trying to educate them on how TradFi markets work so you can work together to maximize the value of your Bitcoin, because otherwise it's just going to be taken from you.
Hello, everybody, and welcome to My Two Sats. My name is CJK, and today I'm with British HODL. We're going to get his two sats on Bitcoin as an institutional asset versus hillbilly coin, new Bitcoin cycle dynamics, and Bitcoin all-time high price discovery. British HODL, thanks for being here, and welcome.
No, listen, my friend, it's my honor. Thank you for having me on your inaugural episode.
Yeah, I wouldn't want to start it off any other way. Your analysis going into the ETFs and now even beyond them has just been on point and great alpha. So I'm sure the community appreciates that.
No, I appreciate you saying that. Thank you.
So I'm going to pull up your Twitter here, and I wanted to go through some of the things that you've been mentioning because you've just been on fire. And the first one I want to look at here is relative to the new dynamics within the Bitcoin price cycle. So everybody can take a look here. What we're saying, there's maybe 4 new things here: bear cycle drop, all-time high before the halving, ETF fund flows, and supply. These are just such important points for people to understand that this is not like it was last time. And as British HODL says, if you approach it with an old energy, you're going to get wrecked. Could you go ahead and expand upon what you're seeing in the marketplace?
Yeah, listen, look, there's a lot of people, I mean, just to put things into context for anyone who has not heard of my story, but this is the completion of my first cycle. So Bitcoin made sense to me in 2020, relatively late by my estimations. And coming from other asset classes, real estate, stocks, and then gold before I got into Bitcoin, I've come to realize that those assets have been around for so long that you can sort of predict what the cycle is going to be like next. Whereas with Bitcoin, it's such a new asset that if you're coming in here going, because I went through the 2017 to 2020 cycle, because I went through the 2020 to 2024 cycle, I know what's going to happen in the 2024 to 2028 cycle, there is a high chance you're going to find yourself wrecked. Because so many dynamics are changing here. The real estate has had ETFs for decades. Gold has had ETFs for decades. This is the first time Bitcoin has an ETF, right? This is the first time that the daily demand for Bitcoin has gone from, $30 million a day at an equilibrium to $350 million a day coming in via these ETFs. So, there is a lot of firsts here. And the biggest thing that I worry about, and I've been hearing a lot of Bitcoiners say this, is, this time round, because I didn't do it last time, when I see a top, I'm going to take some profits because then I want to buy back into Bitcoin at the bottom of the cycle, because I've now figured out, based on 2.5 data points, that this is how the cycle works, and I think you're going to end up getting screwed.
Great point. I mean, there's no doubt with all the points that a cycle low from maximum fear from the FTX collapse. A new all-time high before the halving. Even caught myself off guard on that one.
Me too.
Yeah, it's just the performance is unbelievable. I think one of the questions I get a lot from maybe the normies are, where the hell are all the Bitcoins coming from? Like, even though price is going up and people are incentivized to sell, miners have a limited amount coming in daily. Of course, they have some treasury, but who the hell is selling Bitcoin right now?
Yeah, that's an interesting thought process. And here's the thing, right? Like, let's imagine you bought Bitcoin at $50,000 a coin, and we're now 12 years later, and it's now trading at $4.5 million a coin, right? Wouldn't you take some off the table if you had several, let's say hundreds of Bitcoin? Wouldn't you say, you know what, I've held off enough. I need to take care of my family. I need to take care of my children. I need to take care of certain things. And wouldn't you sell off? I mean, this sounds completely normal in any other market, and I think people should reward themselves for the work that they put in. And hodling is work. If someone thinks that you just hodling is not work, you clearly don't own enough Bitcoin because you haven't seen enough price fluctuation to make you realize that it's actually work.
That's so true. That's so true. And later on in the conversation, I do want to touch on the fact that I do think there's going to be a certain level of sophistication around the financial products and services that are going to be launched that will get to a point where maybe we can benefit from our Bitcoin or our Bitcoin ETF shares in a way where we won't have to sell. But before we dig into that, I do want to bring people back up and talk about the fact of what you mentioned here with all the money on the sidelines. I mean, just a really sickening amount of money on the sidelines. And with the Federal Reserve coming out and pretty much telling us, at some point in time here, we're done raising. We have to stay higher for longer. We're just waiting for the right signals. At some point in time, we will lower interest rates. Now, it being an election year here in the United States, chances are probably greater that they do lower those rates than hold them through the year. What do you see with your outlook on rates? And then can you elaborate on where you think these trillions of dollars are going to go to when they're no longer incentivized to save?
Yeah, I mean, let's look at the mindset of this $8.5 to $9 trillion that's sitting on the sidelines. They've been told that there's going to be some kind of catastrophic crash in the markets. They've been told that inflation is just going to continue up and is never, ever going to come down again. They've been feared into this position. And as a result, they've been sitting there and they've been quite happy with the rates where they are because at least they're getting something on it. However, what they're about to realize is there's not going to be the crash that they thought was going to happen. Inflation is also not going to continue, going up, as you've highlighted in a few of your videos quite well. And now they need to play catch up on the negative real rates that they've actually been earning, right? Because inflation's been trending a lot higher than interest rates. So, well, I'm talking about real inflation has been trending a lot higher than inflation rates. So now this 8.5 to 9 trillion has realized we've probably missed out, on $1 trillion of interest here somewhere. And we need to catch up on that. And so imagine you're sitting there looking at the options, right? What do? You go into the NASDAQ, right? You can go into the S&P 500, and now you've got a Bitcoin ETF, which is, by the way, the best performing asset humanity has ever seen. And now with a couple clicks of the button, I can get exposure to that Bitcoin. So I find it completely reasonable that another $100 billion of this 8.5 to 9 would try and chase some form of Bitcoin allocation. Now, that could be MicroStrategy, that could be the miners, that could be the ETFs. But I think it's completely reasonable to assume that a 1.16% allocation of that $8.5 trillion will find its way into Bitcoin now that these products are available.
Oh, yeah. I mean, at a minimum, right? Because it was a scam. Then it's digital gold. Now it's 1 to 3%. It's going to be 3 to 5% and then 5 to 10%. Until ultimately we end up at that BlackRock report from a couple years ago, which probably sparked the whole thing. The optimal allocation is 85% because we are looking at the apex predator of asset class here.
Yeah, it's quite important to labor on that very point, right? Because there is only one direction that the amount of allocation in your portfolio goes to. Right? And it's really about new cash coming in as well into your portfolio. Because if you've got the best performing asset and you've now been sitting in it for 2 years and your advisor calls you up and says, hey, the best performing asset in your portfolio has been Bitcoin, and I'm about to trim some of that. It just goes counterintuitive to anything. You're supposed to leverage down on your players, on your winners here. And it sort of, in my mind, the way everyone is thinking about rebalancing could backfire, right? Everyone in Bitcoin is saying there's going to be major rebalancing. Maybe for one cycle, But what happens after that, once you realize you left $1 billion on the table by trying to rebalance and be fancy, and you could have just left it in Bitcoin and outperformed everything else that you were going to do as a fund. So rebalancing is a risk for one cycle. After that, I can't imagine how that sort of plays out here, especially as the volatility of the asset decreases. So it actually becomes a better portfolio asset, right? Because as the market capitalization goes up, the volatility is going to start coming down, which is going to smooth out returns. And now you've got less incentive to rebalance if it's the best performing asset.
Interesting. Now, one of the things I talk about with the upcoming Bitcoin yield strategy ETFs, which you and I both know are coming and nothing's going to stop them. Volatility, I think, is actually one of the biggest selling points of that. So it's going to be interesting to see, like, if we get those higher market caps, increased liquidity, how much is it going to dampen liquidity? Because to me, that volatility is what provides market makers the additional premium when they're making that options market. And that's one of the most attractive things about Bitcoin is that implied volatility, which brings forth those larger premiums.
Yeah, but remember, right? You're talking about TradFi markets, and these are completely happy with 1.5% per month returns. TradFi markets don't need the DeFi 12% every 48 hours type returns, right? They don't actually want that. That terrifies TradFi. So if you can set up a Bitcoin income fund, right, and generate 1% a month by selling 25% out of the money covered calls, that would attract way more dollars than any type of DeFi level fund, which is going to try and promise you, 12% every 70 hours.
Yeah, Bitcoin's true free market is kind of be a little bit of a wake up call for Wall Street. Kind of wishing everything else was a little bit more free market out there.
Kind of, yeah. The adoption of Bitcoin by Wall Street is definitely going to be a threat on the timeline of adoption for Bitcoin's quote-unquote free market technology. I'm not oblivious to that, right? Because if we could now get to the point where the investment in that free market technology side goes down because of the amount of money that there is to be made on the institutional side, and it goes through a trough period for 5 or 10 years, right? Less people. I said this, and people sort of hated me for it, but we're at a point now where the ownership of Bitcoin could go up, while the understanding of Bitcoin could go down relative to the number of people that are entering the market, right? And that's quite concerning if you are a Bitcoin technology fan, which I am as well.
I love that point because my biggest con about the ETF is that it takes away the self-custody boarding experience. For me, when I first learned about Bitcoin, taking self-custody, that was an orange pill moment to learning about self-sovereignty and true financial freedom. So great point. There are some threats here, and people need to keep that in mind. As exciting as it is to watch Bitcoin be institutionalized, there are pros and cons to everything. Now, one thing that you said was interest rates versus real interest rates. And I'm curious, what do you think is the real inflation rate in the United States? Is the inflation rate dependent upon the supply-demand equilibrium, or is it dependent upon monetary and fiscal policies, or is it a mixed match of both? And then finally, what do you think the real rate of return is right now?
So I think that you're sitting with real inflation around 9 to 10%. That I feel comfortable saying that. I don't think it's like 15%. Again, inflation is a hard thing to discuss because everyone's individual inflation number is different, right? I smoke Cuban cigars. They're inflating at 45% a year, right? So it's everyone's inflation number is different. But I think that we're sitting at around 9 to 10%, and that's what people should plan for in order to maintain the quality of their life. Now, here's the thing, though. I also think that housing is going to suffer. And housing is a big part of a person's personal inflation number. So you could reduce someone's personal inflation number quite significantly by taking care of the housing issue that we have, which is rising property prices. And I think that will be dealt with because governments have to deal with that, because otherwise you do end up with a revolution on your hands if nobody has a roof over their head. So you have to bring down property prices. So I think that's what they do on there. And as far as my thoughts on interest rates go, I think that we're going to trend down to around 2.5%, which is, there you go. You got your real rate there.
Real interest rates. I missed that last part. My apologies. What was that? Real interest rates?
I think we're around 2.5. I think the Fed rates are going to come down to around 2.5% and balance out there after this cycle's done.
Okay. I think we're kind of on the same page here. This is my setup because I'm just tired of running these numbers, having to figure it. They're leaving us hanging to dry. You know, we have to do all of our own analysis. That's why your funds flow analysis has been so great, just to see the exponential rise in the amount of money coming into the market. And, you know, one thing that I saw you say the other day as well was that during the previous bull market, the entire bull market cycle, there was roughly around 35 billion of funds flows coming in. How have the ETFs performed relative to that? And where do you think we're going to be up at the end of 2024?
So I had James Seyfarth from Bloomberg on my YouTube channel, and I asked him that question, and he said it would be around $10 billion at least. And I went and I said it would be around $25 billion. And we both sort of settled on it would probably be above 10 and below 25. And within 8 weeks, we've had about $10 billion of inflows since these ETFs. So I reckon we're both going to be wrong, but that's going to be good for everyone. So yeah, I based on the current trends, I think we're looking at about 35 to $40 billion through the ETFs within the first year.
Wow.
That's just one demand source, right? Like if Bitcoin's in the middle, it's got all of these demand verticals coming in, and ETFs is just one. It just happens to be the biggest one, right? It doesn't include retail. It doesn't include local people buying the asset. The beautiful thing about Bitcoin is everyone's chasing the exact same asset, whether you're in LA, New York, London, Singapore, Dubai, wherever you are, you're chasing the exact same asset around the world, unlike real estate, right? And so that can cause a bottleneck a lot faster than a lot of people think, and that's why you're seeing the price, do what it's doing right now.
Now, I hear a lot of talk out there about how OTC is running dry and, these buyers are going to have to move to the market. I found an interesting correlation between this when the ETF first launched. I'm sure you're well aware of what we call the kimchi premium for those who are paying a premium for Bitcoin in those restricted Korean areas. Well, I think what we are seeing here is I'm calling it the Patriot premium because it has been very easy to buy the Asian hours and sell it to the Americans. What do you feel? How do you feel? Do we see this process continue? Are BlackRock's customers just going to have to pay a higher price, or are they going to figure something out in order to make this price discovery a little bit more accurate?
Well, you think about it, you go, how do you figure something out, right? Like it's the same asset everywhere in the world, and you can't really control what's going on in Asia when the U.S. markets are closed. So, and you can't control the underlying asset. So, I think this just continues, and I think at some point in the future, I think the Asians are going to realize this is a really good contango opportunity and start leveraging down on it, which will only cause the Bitcoin prices to skyrocket even more.
Absolutely. Now, I saw one of your, before we get into this next tweet here, I did see one of your tweets I had to ask you about because you were talking about how basically the market makers were going to be selling naked calls and naked puts. Do you think that it would be more effective for them to run a covered call strategy and not have that upside price volatility? Or do you think they're just going to mix everything together with these income products?
I think professional investors, like professional traders that are managing those funds, will do a mixture of everything, right, to generate that yield for their customer. I think individuals, this is where the ETF sort of starts riding off into the sunset by itself. Individual investors will now be able, hopefully within the next few months, to sell covered calls on their ETF position. Right? We've never ever had this before. Like this is a very, very exciting opportunity for Bitcoin because the first time ever that you can not only hedge by buying put options, but you can also generate an income by doing covered calls. Right? Now there's obviously going to be the right time to do that and all this other stuff. But the fact that you can do it is absolutely huge. We've never been able to do this before. And remember,
Absolutely.
as you know, but most people that are watching might not know, that once a market maker allows you to place an options trade, they've actually got to go and delta hedge that position. And that might require them actually owning the underlying asset. And as the asset goes up and more people place bets on those assets, they've got to buy more and more of the underlying asset to hedge the delta on it. So it's like, when does that stop?
Yeah.
I don't know. I don't know the answer to it, but it's terrifying, right? It's terrifying to think that this is what's going to happen when the market maker that is allowing you to do options might be the biggest purchaser because of the volume going through the options.
Yeah. Oh, absolutely. I mean, it's the amount of demand on spot BTC and liquidity, in my opinion, is going to explode after these options go live because, like you said, delta hedging, just the rules of how it works, and it's actually like you said, they're a little bit scared of that kind of volatility because if
Yeah.
they're not properly delta hedged, you start creating some red holes in that balance sheet because you got some price action that you would never see in the traditional stock market because they're going to issue, they're going to dilute, but with Bitcoin, there is no issuance, there is no dilution. We got 21 million and that's it. So my next
Right.
question for you is, with these Bitcoin yield strategy ETFs or income funds, what do you anticipate that yield would be, like in a percentage range?
I think we can. I think for the first cycle, once they're approved, I think you're looking at 2 to 3% a month, and then as the cycles get more mature with the underlying product, and as the premiums sort of come in, I think it will settle around 1.5 to 2% a month.
Okay, because that's nuts. 24 to
Unbelievable.
26%, right? And then I mean that's unbelievable with 5% Fed fund effective rate. You bring that
Right.
Fed funds rate back down to zero. I mean, a percent, even a percent to a percent and a half per month. We'll talk about being incentivized. If $9 trillion can run into government debt at 5%, which has inflation risk and a negative real carry yield, how much is going to be running into the opportunity to be delta neutral, bringing in 12 to possibly 36%? This
Yeah.
is
Well,
groundbreaking.
this is why I've been saying for a while, like the ETF, the American ETFs to me are the single biggest news for Bitcoin for the next decade, right? There's going to be a lot of people that are addicted to dopamine, searching for something new to come around and hoping for some other country to join the bandwagon and this, that, and the other. But the single most important thing for Bitcoin are these American ETFs. Now, second to that is options on these American ETFs, because now you open up income funds. Now you open up, just normal investors that want to get into cash flowing assets. You now open up cash flow funds. There's so much that gets opened up once these ETFs. So these options are about to be unleashed on these ETFs, and RIAs haven't even started selling the underlying ETF yet. Right?
Yeah.
So what happened? There's going to be a compounding effect here of demand and use cases and this, that, and the other. When people say Bitcoin doesn't have a use case because I can't buy I was going to swear. I don't know if I can swear on your channel or not, but I can't buy a damn coffee with this, right? And that pisses me off because it's like, you're worried about buying coffee. There are people who have got millions of dollars who are worried about how they're going to pay their income.
Mm.
That's a bigger problem than you being able to buy your coffee,
Yes. Yes.
right?
Well said. That
So,
actually leads us perfectly into this tweet. I got to bring it up because we're flowing right into it. Where British HODL guys, he comes in and he tells you, and this was so funny. I love your ability to trigger people by calling it hillbilly Bitcoin, right? The institutional asset of the Bitcoin ETF versus self-custody Bitcoin. It's just, guys, we're naming two different things. It doesn't matter what you name it. The reality, but I love it. It's hilarious. And what you're really saying here is, for the goal of all these maxis who maybe don't like that hillbilly term, it's to preserve as much Bitcoin as possible for the lifetime of ownership. So that's the key. And if these ETFs can help you do that while
right.
generating a monthly income, can you just describe for the audience how this would work and what goes into this kind of strategy?
Yeah, so I said hillbilly Bitcoin because I wanted to get people's attention. And basically, there's this massive debate right now about ETFs versus self-custody Bitcoin. And the one thing you don't hear is, you don't hear the self-custody Bitcoin fanatics, hating on the price action that the ETFs are generating, right? You never hear them hate on that. You never say, oh my God, these ETFs are driving up the price too much. But realistically, my goal as an investor is to own as much of the scarce asset as possible for as long as possible. And so if that's my goal and I need to generate an income, then it's very important to start analyzing, well, what are the options for me to generate that income while holding that asset and being able to preserve my holding of that asset for my progeny and the next generation that's going to own that asset. It's like this. If you had to own a bunch of real estate and you had to sell off that real estate every few months just to live on cash flow, you wouldn't have any real estate left to pass on to your children. And at the end of the day, whether people like it or not, everyone's goal should be to create some Nepo babies, right? Like, we want to create children that have wealth that they can execute their vision onto the world and hopefully execute the vision that your last name stands for. And if that's the goal, then the goal should be to hold on to as much of the asset as possible. And if you've got two people, one person with $1 million of self-custody, hillbilly Bitcoin, and you got the second person with, ETF Bitcoin, right? Even though it's the same underlying asset, the person who has to sell off their self-custody Bitcoin on a monthly basis to live is going to be worse off than the person who's got their Bitcoin in the ETF and can use yield and income strategies to make their income that they need. And based on a $10,000 per month expense, it basically, and by the way, that's $10,000 a month in that example, and a 30% CAGR, not the 60 to 80% CAGR that's going on right now, a 30% CAGR. You've got the person with self-custody Bitcoin ending up with about $100 million of Bitcoin after 20 years, and the person with the ETF ending up with about $190 million of Bitcoin. So whose children are going to be at a better advantage over that after that 20-year period? The self-custody Bitcoiner that's apparently so proud about the fact that self-custody and sovereignty is the most important thing, or the person with $85 million more Bitcoin to pass on to their children?
Yeah, well said. I think this is a perfect example of Bitcoin evolving from digital gold to digital collateral. And there's
Right.
going to be pros and cons to that evolutionary process. One risk I see in the ETF solution is that in the TradFi, the traditional settlement process, technically the custodian is the owner and you're listed as the beneficial owner. Now, if we get to the point where we move from inflation to hyperinflation, and it's my stance that the only difference between inflation and hyperinflation is trust. So what I'm really saying is, if we see a full loss of trust in fiat and in the system, do you see that systemic risk playing a role of potentially losing your coins to the custodians? Or do you think there's going to be a way to mitigate that risk?
You are the owner of the underlying asset on that ETF, and is there a risk? Yes, right. There's always a risk. There's always a risk of a potential 6102 executive order. There's always a risk of all of these things that are going to happen. But if you are a smart investor, your job is to assess the probability of that risk and then allocate accordingly to the probability. Now, I'm not saying you should go 100% self-custody or 100% ETF. What I'm saying is that if you want to be smart, you should probably have a sliding scale between the two, right? Because you should not let go of the opportunity to generate income using ETFs, because you're going to end up losing more Bitcoin by not doing that. So think about what the end goal is and then think from that perspective. And I believe the end goal should be to preserve as much Bitcoin to pass on to the next generation as possible. So is there a risk? Yes. Do I think American capital markets survive if they steal assets out of an ETF? No. So therefore, I put the probability of that happening much lower. I also listen to people that understand law a lot better than I do, and understand their perspective on executive orders and 6102 style executive orders, and I put the probability of that much lower. Secondly, I also trust in myself and my own ability to start seeing where this thing might be going. And within 15 years, I might have to make a different decision. right? After 15 years, I might need to move out of that ETF and put it all into self-custody, because in 15 years, there might be developed markets to generate the same income on my self-custody Bitcoin. But until then, I'm not going to give up 15 years of opportunity by using these ETFs, because I'll be selling down my Bitcoin position, and I don't want to do that.
Yeah, well said. Especially when both of our goals are to maintain as much Bitcoin ownership as possible. Now, I think
Yeah.
some people get confused about when you hear yield, like the hair on your neck stands up. People get a little bit scared. But could you describe why the yield on a Bitcoin ETF and these different option strategies, income fund strategies, are actually not yield through inflation, but actually through premium collection? So therefore, it's a sustainable yield.
Yeah, so a lot of people in Bitcoin get terrified of the word yield because the first time they heard the word yield was with BlockFi and Celsius, right? Yield has been around for hundreds of years, and it forms the foundation of capital markets. Because in order to have capital move around efficiently, you need to be able to find what the yield on that is, so you can actually execute that capital into the economy. And so the difference is this: if I'm using options, for example, to generate a yield on an asset, that asset is actually being productive in the market, because I'm allowing someone to take a speculative bet in the market based on what's going on, whatever their perception of the market is. And whether you like it or not, that is a productive use of that asset. That asset is actually being used. Whereas, someone trying to do yield on BlockFi and this, that, and the other, we're talking about two very different things here. And the thing that I worry about the most, and what I try and create content around, is trying to elevate the consciousness of people who have sacrificed years, energy, hard work to own Bitcoin, and trying to educate them on how TradFi markets work, so you can work together to maximize the value of your Bitcoin, because otherwise it's just going to be taken from you. And that's just what it is. And here's the thing, right? If my children have $100 million more Bitcoin than your children have a higher chance of getting dominated by my children. People don't like hearing that, but we have a monetary network here. This is not an emotional feel-good network. This is a monetary network. And what that means is, the more units of the monetary network that I own, the more powerful I am. So the goal should be to maintain your ownership, if not increase it, not to sell it off because you feel good.
Absolutely. I mean, and even if you get a higher price, it's still being taken from you.
Right.
Right? That's the way they're incentivizing you. That's the way they're distracting you. Oh, look at the bigger number, when ultimately, with 21 million and the most pristine form of collateral in the world, I mean, if you sell it, I feel, unless there's some type of a family emergency or something, if you sell it, you're an idiot. And that leads us into this next tweet here. Now this one, even I was sitting on the computer and I got a little triggered, because I have personal bias in this, because I'm building a platform for this. So it brings out a smile in me, because I love people who can say an idea and it triggers conversation, it triggers emotion. That means you're talking about something important. And here we're talking about having these different types of asset management solutions, whether it's to borrow against your ETF or to borrow against your spot Bitcoin in self-custody or some kind of multi-sig setup. And you go on and you say that, the traditional system is actually going to be better. The traditional system is actually going to be incentivized to interact with this type of equity. And you say, for example, you might get a 14% interest rate to borrow against self-custody, but only a 6% to lend against your ETF. So could you drill down into how you see this playing out over the next couple of years?
Yeah, you got to look at the friction that's involved with lending against an asset. If you are dealing with self-custody Bitcoin, what are the points of friction that you have? Firstly, you got all the keys that you need to manage. Secondly, you got the multi-sig solution that you need to set up. Thirdly, someone needs to insure that and wonder where the hell it's going to be insured and who's going to look after it and all this other stuff, right? So, and that's just 3 points of friction. Whereas with the ETF, I know BlackRock's custodying it. I know Fidelity's custodying it. I know that they have insurance against loss on it. And I've been dealing with this product wrapper called an ETF for 70 years, right? Like the friction of dealing with that asset is much less. And so if you are a lender, you want to lend against the lowest friction version of the asset because it allows you to revolve the debt a lot faster. And that's really why I think that, you know, all of these lending solutions on Bitcoin, they will be there. I'm not saying that there won't be solutions there. What I'm saying is that it will cost a lot more. And you're seeing this right now. You want to go take a loan against your Bitcoin, go find out what the interest rate is at Unchained Capital, right? It's 12%, right? Last time I checked, it was 12%. Now, if you are a business owner and I'm a business owner and we have the exact same business and the exact same future growth plan, but you get to borrow money at 12% and I get to borrow money at 6%, I'm going to beat you. It's just simple as that. I don't care what type of metaphysical shit you want to believe in. If I can borrow money at half the cost that you can borrow money, I'm going to beat you. And that's the same thing that's going to happen with assets. And we've seen this in real estate. It's the reason why real estate investors who are big real estate investors become more successful than small real estate investors because they've got credit with the lender, right? It's sort of the same thing. It's less friction to lend to someone who's already financed 1,000 units compared to someone who's trying to do their first unit. It's less friction because I can rely on you. I know what your credit is. I know all of these details. And that's why I think the same thing's going to happen to Bitcoin.
Now, I think one of the most interesting concepts here is the difference between a credit market and a commodity credit market. Now, when we talk about credit and you talk about the credit score and the promise of repayment, you know, I like to say it as proof of work is proof of yesterday's hard work, whereas proof of stake or credit markets are promises of tomorrow's work. So, you know, that promise can be defaulted on because the work isn't done yet. So I think you say, you know, that you can borrow against at 6%. Do you ever see a time where you can borrow against Bitcoin at the lowest rate in the world? In other words, right now, governments are considered the least risky counterparty, and treasury debt is considered the risk-free rate of return. Do you think that this accelerates and Bitcoin evolves into that most pristine form of collateral where it's not just about taking advantage of your trapped equity through the ETF? Now it's about actually being identified as in a commodity credit, in an over-collateralized loan or ETF shares on margin, that you are actually the least risky borrower in the world, and that the risk-free rate of return can trend from government debt to Bitcoin collateralized loans?
Yes, I can see that happening. My question is always, what's the timeline, right? Because if you're trying to build a solution for that to happen, if the timeline is 2 years versus the timeline is 20 years, that's a very, very different value proposition from your perspective as a lender, right? Or a platform builder. You could have the exact right idea, it's just the wrong timing. And we've seen many, many, many stories like that in all different areas of business and investing. So it's really about that for me. It's about, what is the timeline that you think that's going to happen? I think you'll be if that happens, it will happen with the ETF first, right? The Bitcoin ETFs will be classed on their own as more pristine collateral compared to SPY or QQQ, for example. I think that with the increase in friction, so the question for someone who's trying to build a platform like yourself to allow the functioning and facilitate that happening is, what are the friction points and what are the differences in friction points between the self-custody Bitcoin and the ETF, and how do I minimize those friction points? And ultimately you get down to two things. Number one is who's holding the keys, and number two is who's custodying it, and therefore insurance. And you cannot beat the ETF when it comes to those two from a lender's perspective.
Yes, I agree. At first, there's no doubt the ETF is going to be out an advantage. As you mentioned it, the velocity of the expansion, you know, it's much easier as a market maker when you can just partner with a bank who can expand credit with no limit versus, you know, an equity-based lender who has to have a pool of liquidity in order to lend. and they
So
can't just
even
create it out of thin
even
air.
even simpler, right? Let's just look at it like this. Let's say I have a Charles Schwab broker account, right? And in my Charles Schwab broker account, I own the Fidelity Bitcoin ETF, FBTC. If I want to borrow against that, eventually all I'll do is go into my Charles Schwab broker account, click two buttons, and the credit will show up in my account, right? Because the friction is so low. Now, if I've got the same amount of Bitcoin in self-custody, I've now got to call Unchained Capital, right? They've now got to assess me. I've now got to move that Bitcoin. So if it's set up in a multi-sig like Casa or something else, I now need to move it around to make sure that Unchained Capital has one key attached to it. They now need to get the loan approved, and then they need to send me the cash. All of that friction is what incentivizes the ETF.
Yes, well said. I absolutely see that, especially from the side of a lender. The borrower is probably just going to say, I just want the best terms. I just want to click a couple buttons. But from the lender's side, the additional risk, the additional friction, definitely a barrier to entry to the marketplace, which is why
It's always the
ETFs.
lender's side. It's always the lender's side that drives the market, not what you want, right? When I say
Yes,
you, I mean Bitcoin maxis. It's not what Bitcoin maxis want. It's what the lender wants, because the lender is the one taking the risk on that trade.
that's right. Now, I'm not sure if you got a chance to see or not, but did you get a chance to review the concept of a self-repaying mortgage powered by Bitcoin?
I heard it and I skimmed through it, but I didn't look. I didn't have time to look at it in detail. So I would like you to actually educate me on what you meant by that.
Yeah, so I imagine a day where people who want to be empowered by their Bitcoin stack, and let's say maybe they don't want to actually put it on margin. They just want to use it as a way to attain a lower interest rate. So this is not a new concept. This could have been done with gold. If you went to a mortgage lender, you could say, hey, I'm borrowing 500,000 for my house, and the mortgage rate is 8%. This is ridiculous. What if I posted an additional $500,000 of gold collateral? And since I'm reducing your risk, you can reduce my rate. Do you
You can
think
do
that's
that
a
right now.
relationship?
You can do that right now, right? It's called a set-off mortgage, right? You can put cash in one account and it will set it off against whatever your mortgage payments are. That's what you're discussing here.
Right, but replace cash with Bitcoin, because that nominal value of cash will stay flat, but the Bitcoin will actually gain value over time. And that's where the self-repaying concept comes from. As it gains value, you can pull back collateral to maintain the agreed upon loan to value ratio, or you
Yep.
could just liquidate and pay off the loan.
Yep. How do you think people that can't get their head around ETFs will get their head around, allowing JP Morgan Chase to hold your Bitcoin?
Yeah, I don't think it's going to happen. And it's one of the reasons I'm building People's Reserve. I think ultimately Bitcoiners, they're going to want to sit down, shake your hand, look you in the eye. I want to borrow money from you. And as a lender, I want to know who's borrowing from me as well. There's a lot more risk
that
in
friction.
an equity-based lending protocol than there is in a bank, right? I mean, when a bank writes a loan, if it disappears, who gives a shit? Write it off. But when your pool of liquidity is all you got to draw from, these types of relationships become important. But I love your point of view, and I think you're right. There's room for both. You should
Yes,
have
of
some in the
course.
ETF. You should have
Yes.
some self-custody. Play the system, work the system. So at the end of it, we all end up holding more Bitcoin than if we just had a sell.
100%. I think that's the goal here. The goal is always to own much more Bitcoin than you own today, right? As long as you can own more Bitcoin tomorrow than you own today, I think you're doing well. So there's going to be room for both. All I'm saying is that when you've got these financial rails that will allow you to borrow against your Bitcoin ETF at Fed plus 50 basis points, it's going to outcompete the other solutions. So the question is how do the other solutions outcompete that? And I think the best marketing is already going on. It's straight up gold style doom and gloom boomer marketing, right? Like, it works. There's a reason why all of the gold bugs do it. When I was in the gold industry, we did it too, right? It works. You scare the shit out of people. And so that's the solution that they're going to do. And there's going to be a certain amount on the market that goes to that. The problem with that is that the majority of capital that now comes in is going to be holding the ETF. So that's the market that's going to develop. That doesn't mean that there won't be opportunities, but what I'm absolutely saying is someone who takes the opportunity to borrow against their Bitcoin at a 12% interest rate because of the frictions involved is going to be outcompeted by someone who, can borrow against Bitcoin at 6%.
Absolutely. So last segment I want to move into, I want to talk about the future of Bitcoin price discovery. Right now, what I call Bitcoin fair value. I'm not sure if you know, I'm the creator of the Bitcoin fair value algorithm. It's an algorithm. Okay. It's used by miners to manage their treasury, take away the human emotion of it. We know human emotion is the biggest obstacle in Bitcoin. So right now we're sitting around about a 9.52% premium, which is actually within the fair value range. It's plus 10, minus 10 is the fair value range. So my question to you is, with the new dynamics to this cycle, like we mentioned earlier, we got a lower low, we got a higher high. Everything is, the models are sort of breaking down. So with this new dynamic, what do you see new all-time high price discovery for Bitcoin looking like?
God, the $64,000 question, right? So I think we're going to go through stages here. I think that I put out a tweet and I said, we need a solid close above 69.5, right? Once we get that solid close above 69.5, I said, I think we will be at $100,000 within 40 market trading sessions, 40 market trading sessions. I think past 100,000, a friend of mine calls it the ego breaking number, right? The all-time high is the hater breaking number, and then the 100,000 is the ego breaking number. If your ego was too big and you were too proud to invest in Bitcoin, at 100,000, you either die with the fishes or you stand up and go, okay, I need to learn about this, and maybe I've got this wrong. And so I think 100,000, we're definitely, I think we'll break 100,000 this year. I think by the end of the year, we'll be at around $160,000 a coin. And as far as the cycle goes, it's tough for me to say. The one thing that has been, I'm curious to hear what you think about this, but the model that has made, the most sense, so to say, and that's the wrong word because no model really makes sense to me, is stock to flow. And that's because of my background in other assets. Now, I always sort of vibed with the very first stock to flow model that Plan B put out, and that put a price point of around 50,000 for the last cycle. And then for this upcoming one, I think it's around $500,000. I can see us getting there, especially if options are released at the right time, especially if all of these things start coming out. I'm curious to hear what you think about that and how you think these pricing models play.
Yeah, I myself am actually a big fan of stock to flow. I don't think that it's as effective when it's by itself. So I have 5 variables that I track within the fair value algorithm, and stock to flow is one of those variables. Now, what's interesting is that it only changes with every halving. So it's a pretty consistent variable. Where we get a lot of deviation in the variable is in the cost of production in the Bitcoin energy value and network value transferred. So with these ETFs, what's been really interesting, actually, if people can just take a quick look at this chart, you see this orange line, the ETFs, you remember the ETFs launched and then we crashed the opposite way. BFV actually started creating a divergence at that point. And if you go back into this little rabbit hole of my tweets, at one point I was like, guys, hold on one second, give me a day. I need to check out what's going on here because I think the script might be broken. So I had to go into the script and make sure that everything was, there were no bugs or anything. And it turned out that the funds flow from the ETF, Bitcoin fair value, accounts for that funds flow through the network value transaction ratio. So you take the amount of funds that are being settled on a 24-hour period and you divide it by the amount of coins in circulation, and that gives you a value per coin for how much was settled on the network. That value has absolutely skyrocketed with this fund flow of the ETFs because those coins are moving from one place to another. So the account, that's what's pushing BFV up right now, as long with hash rate and difficulty adjustment going parabolic. But what people need to understand is, even though Bitcoin fair value right now is at the 66,000 level, when we get to the halving over here, and these variables adjust, right? Because the halving happens without mercy. So what happens is the cost of production doubles overnight, and
Yep.
there's no way to escape it. So both of the cost of production variables are going to double. Stock to flow is going to go from 50 to 500. MVT will continue to increase with the fund flows from the ETFs. And then MVT is continuing to increase as well with Bitcoin energy value. So yeah, I don't really necessarily like singular models. And that's why I did my best to bring together Charles Capriol's cost of production models, Plan B's stock to flow model, kind of looking at the Bitcoin network as its own internet economy, and then measuring that economy in production and consumption, or the earning of Bitcoin and the spending of Bitcoin. So with all that said, I think post-halving, Bitcoin fair value is going to immediately adjust like we see here. A rapid scale adjustment will happen again. It's kind of like a double shock. We're getting a demand shock and we're getting a supply shock. That should put Bitcoin fair value in 6 digits. So I'd say anything under $100,000 right now will eventually be, after the halving, the discount range of the protocol. And it's amazing to see that we're getting that double shock. I haven't seen anything like it. I mean, in your studies, and I know you're saying the cycle's different already, so I know you agree, but is this demand shock going to slow down? Because there seems to be no signs of that.
Well, listen, in order for BlackRock alone to put a 1% allocation of AUM, they need to buy $100 billion of Bitcoin. They've got a $10 trillion AUM. Just for them alone, they need to buy $100 billion of Bitcoin. For Fidelity, that's another $45 billion. This is before Charles Schwab comes into the game with another $80 billion. So I worked out, like, BlackRock could put in just BlackRock alone could put in $250 million a day, and it would take them 2 years to fulfill that 1% allocation. And that's just BlackRock alone. So do I think this demand is going to slow down? No, I don't. I don't even think we're in the warm-up yet. I used to say, this is the warm-up. I don't even think, this is like the fighter just got out of his car and started walking into the building, right? He's heading to the warm-up at this point. Like, wow. I don't think this is the warm-up. We haven't got RIAs selling yet. We haven't got options yet. We've got people squeezing into this MSTR trade that's going on right now. Miners haven't started performing yet like they normally do. Like, there's just so much going on here that's not even warming up yet. This is so early. It's unbelievable.
That's so well said. And I think every one of those factors you just named plays into my thesis, where at one point, I like to say there's 2 prices of Bitcoin, just like there's 2 prices of gold. There's a commodity price and there's a monetary price. So a lot of people buy gold with the concept of, well, it's undervalued. Yeah, because if it was being used as money, and the value prop of money is global GDP divided by the amount that exists, then yeah, the price of gold should be upwards of $50,000. But it's used by the jewelers, it's used by the dentist, it's trading at its commodity value, which, interestingly, the price of gold has been going up. We hear Peter Schiff talking about the gold's going up, but the miners aren't going up. And this is such an interesting concept, because what's happening is the all-in sustaining cost of the gold miners is going up. So even though the price of gold is going up, the cost to pull it out of the ground is also going up, and the margins are getting squeezed. So it's really important for people to pay attention to the difference of a commodity price versus a monetary price. And when it comes to Bitcoin, every one of those dynamics that you just named, to me, is not treating Bitcoin as a commodity. Because right now, Bitcoin fair value has demonstrated with 100% backtesting accuracy that the commodity cycle is what's taking place, where we start at fair value, we go to premiums, back to fair value, discount, and so on. But at some point in time here, we are going to leave the commodity price. At some point in time, all the things that you just listed off are going to happen. And as that fighter moves into the building and starts to enter the ring, we're going to be moving from commodity price to monetary price. And that's when we start talking about global GDP divided by 21 million.
Yeah. It's an exciting time right now. However, I always try to let people know to not get excited by like what's going on, and understand that the only thing that actually matters is how much Bitcoin you own. right? We can get easily caught up in all of the good things that are happening, but ultimately the worst thing I like to see is someone who understood the trade, understood the opportunity, not owning enough, because now your children are looking at you going, you failed. Right? Because
That's such a
you
good
knew
point.
you knew what was happening. It's not that you didn't know, because if you don't know, you weren't in the game. You weren't watching this interview. You weren't watching and reading all of the other stuff. We could sort of give you the dumbass pass, right? We can sort of go, okay, cool. You just didn't know, but you know. Everyone watching this knows. So the goal
Absolutely.
here is to own as much of this asset as possible, not be able to talk about it at a bar and high five happy hippies at conferences. The goal is to own as much of the asset as possible. And people don't like hearing that, because they know in themselves, when they look at themselves in the mirror every single day, deep into their own eyes, that they're not working hard enough to acquire as much Bitcoin as they could have. And we're now at 72,000. In my opinion, at 72,000, we're now talking about people with $2 to $7 million net worths. That's who I'm trying to save at this point, because the majority of people under a $2 million net worth do not have $72,000 lying around in free cash flow to dump into an asset they learned about yesterday. This is running away from you as faster than anything you can imagine. And people are sitting here going, because I'm watching a YouTube video, or because I'm reading a book, or because I'm going to a conference, I'm getting something done. The only way you get something done with a monetary network is by owning a percentage of the underlying asset.
Now, what do you think about unit bias?
It's dead. Unit bias is dead. There is no such thing as unit bias anymore. We need to stop talking about it. The game is moving too fast at this point. Like the game is moving way too fast for us to be still worried about unit bias in 2024. You've now got the ETF. If you've really got that much worry, go buy 2 shares of the ETF and start getting into it. Like, unit bias is completely and utterly dead as far as I'm concerned. There is no anyone talking about unit bias, and that's what's stopping them getting into Bitcoin, needs to be bent over and spanked, because there is no more unit bias when it comes to Bitcoin. At all.
Well said. Well said. I find a lot of those people too also say, well, I'll just go after the miners, and they treat like the miners as like it's some kind of, yeah, exactly. I was in the mining business. It's a rough business. It's a brutal business. It's just like the gold miners. The price can be going up, but the value of your company can be going down, because there's so many other different dynamics of what's happening, especially with Bitcoin. My take on Bitcoin as an engineered money, where the difficulty adjustment drives the cost of production towards the price. And since price is above cost most of the time, margins get squeezed continually. So if you're out there thinking you're going to buy a Bitcoin miner and get a better result than buying the money itself, the asset of the monetary network, you're right. You do need to be bent over, because you are going to lose. Bitcoin is where our focus needs to be, and it's just so well said. So we're coming up here to the end of the time, and I just really appreciate you taking the time and having my inaugural show, My Two Sats, being with British HODL. Is there anything else you want to leave everybody with?
No, listen, look, it's my honor for doing this. So thank you for asking me to be on here, and I wish you the absolute best of luck with it. I think your content is amazing. And I love your analysis as well. I've only really started looking at it over the last, I would say, 2.5 to 3 weeks, but it's been really great, and I hope to read more of your analysis on it. So I suggest everyone subscribe to this channel. If we have an algorithm, what most people don't realize is we actually have an algorithm in the background that tells us who watched the video, and if you don't subscribe, it automatically puts you into the bearish on Bitcoin list. So if you don't want to be on the bearish on Bitcoin list, you better subscribe to the channel.
Thanks so much, British HODL. Guys, follow him. If you're not following him, look at what he's saying and look at the results. You can get alpha here. Thank you so much, British HODL. I appreciate you, and hopefully we can have you back again.